Hi, everyone. This is Jeff Clark of the Paydirt Prospector newsletter here in beautiful Vancouver. It's sunny here for the Metals Investor Forum. And one of the companies I invited for some very specific reasons we're going to talk about is Skyharbour Resources. And this is the CEO, Jordan Trimble. Jordan, thanks for coming to the Metals Investor Forum. Really appreciate it because I do like what's coming with the company. I like the team you've built up. You've doubled the amount of drilling. But first, let's start with the team because you've added to the team over the past year. So tell us about everybody's background because that really supports what's potentially ahead here for the company.
Yeah, absolutely. Well, thanks for having us. It's been a great conference. We were just talking about how busy it's been, so it's great timing for it. Look, Skyharbour, we've assembled a top tier management team, board of directors, geological team with focused uranium exploration expertise in northern Saskatchewan, the Athabasca Basin. I've been running the company really since day one, where in 2014, 2015, we were focused on acquiring dirt cheap uranium exploration projects. And by dirt cheap, I mean it was more a function of the market and the timing where we were very contrarian and were able to take advantage of that opportunity. My chairman, who I work with, Jim Pettit, him and I have built and sold a gold company called Bayfield, which we sold to New Gold. And that was what set the stage for us to start Skyharbour just over a decade ago. We teamed up with a group of geologists in Saskatoon, and recently, within the last, call it year and a half, we brought on a notable name in the Athabasca Basin, our VP of Exploration, heading up our team in Saskatoon, and that's Sardar Donmez. And Sardar joined us after 20 years, almost 20 years at Denison Mines.
Yes.
He was at the discovery of Phoenix and Griffin, so he knows the rocks well. Specifically in that part of the Athabasca Basin, keep in mind our two main projects are basically right there with Wheeler between the McArthur River Mine, the Key Lake Mill, so Russell and Moore Lake. Our assets that we're exploring, the geology is very similar to what you have at Wheeler. And so Sardar saw what we were doing in 2023, 2024 at these projects and was quite excited with what we were finding, and then joined us. Big addition. And then we've added a couple of other notable names over the years. Dave Cates, who's an independent director, president and CEO of Denison Mines, and a very important part of our story in that Denison is our largest corporate shareholder. In fact, they've added to their position quite significantly in the open market recently after we closed this major joint venture property agreement with them at Russell. Dave personally is quite a large shareholder, and so that's a big part, a partnership in our story. And then a gentleman by the name of Joe Gallucci, who's now the head of investment banking at Ventum, well-known financial institution and brokerage here in Canada. And he's been an independent director for a number of years. And Paul Matizik, well-known in the industry, has built and sold 6 mining companies for an aggregate of $2.5 billion. And then lastly, we brought in, he was a broker initially, a gentleman by the name, a good friend of mine, Brady Rack, as our VP of Business Development. So all in all, it's a great mix of, again, focused exploration expertise, geological expertise in the basin, coupled with a management team and a board of directors that can raise capital and can build and sell mining companies.
That's great. It's a fantastic team you've built, Jordan. So congratulations for that. So let's talk about the projects now. We've got 2 sort of flagships, I guess, that you've kind of kept for yourself, and then a whole bunch of joint ventures with other companies that they're drilling. So much is going to be happening here in 2026. But why don't you start with the 2 flagships and we'll go from there.
Yeah, so we have 1.6 million acres across 43 projects, assets that we have ownership interest in. And the 2 main assets, Russell and Moore, this is the focal point for us and our investors, our shareholders. That's where we're funding most of the drilling that we're funding directly. It's at those 2 projects. Both of which are advanced stage exploration assets, strategically located in the eastern part of the basin. Low cost drilling from nearby infrastructure. In fact, the haulage road to the McArthur River Mine traverses our Russell Lake project. There's power lines there. There's an exploration camp that, again, we generate a little bit of revenue from renting it out to other operators and companies in the area. But this year, 2026, is poised to be the biggest year in terms of meters drilled at those projects. So
both of them.
So Russell, We just announced now post-closing, it's important to bring up this deal we just announced with Denison.
Yeah.
We closed a $61.5 million project transaction with them. So they're now a JV partner with us at Russell. We've reorganized the project into 4 sub-properties. Okay. We'll keep 80% of the bulk of the claims, called the RL property, and we're going to be drilling there. Denison with 20%. They have to fund their 20% initially. And the rest of the project, Denison can earn up to 70% by spending $40 million in exploration, as well as making some additional cash and share payments to Skyharbour in the coming years. So we're jointly now advancing the project, and we've announced plans for over 15,000 meters, 15 across the different properties.
Yes.
In 2026. Last year and the year before, at most, we were able to drill about 10, maybe 11,000 meters. So the budget at Russell has increased over 50%, and a good chunk of that funded by our new partner, Denison. And again, they are building a mine just a few kilometers away from where we're drilling. So it's a very strategic asset. We also have 8,000 to 10,000 meters at Moore Lake. We own 100%.
Wait, back up a second for Russell. Denison wouldn't be joining in and putting that much money if they didn't see a lot of potential there.
You're absolutely right. And look, it's if you look at it on a map, it's the claims basically surrounding Wheeler River to the north, to the east, and to the south. A lot of the same high-grade conductors trend from Wheeler onto our Russell project. So absolutely, a big part of this deal is the fact that they see major exploration upside potential in the project. And now we get to work with their team to unlock that value, hopefully in the next very short period of time.
Yeah. And then the other project, how many meters?
More. We own 100% of Moore. There is a small high-grade deposit there. We're looking to grow that, expand the resource. It's relatively shallow. We've had grades as high as 20+% U3O8. We just announced some additional results up to 12%, just under 12% U3O8 over 1.6 meters. And the mineralization shallow. So it's interesting when you look at it through the lens of one of these two surface mining methods, SABRE or ISR, where you don't need a lot of pounds to justify the economics and a development scenario. It's something that we're looking at a little more closely this year. It's still an exploration project, so we are still very much focused on growing the resource and making new discoveries elsewhere on the project. But 8,000 to 10,000 meters on top of the 15,000+ meters at Russell. So those two projects alone, our two main, that's 25,000 meters.
That's
between us and our new partner, Denison.
Yeah.
Then we have all the other partnerships. That'll bring in another 5,000 to 10,000 meters. So we're looking at 30,000+ meters of drilling across 8 or so projects in our portfolio this year.
Yeah. Tell us briefly about the other the JVs that you have out. Those are more of a project generator model.
Yes. So it's a part of our dual prong strategy. First and foremost, we're an exploration company. We're out there aggressively advancing our main projects in Russell and Moore. But we have this prospect generator business that's quite robust. It's growing quickly.
It is.
We have 10 partner companies now spending over $118 million potentially in combined project consideration. That's basically our current market cap. And chunk of that is cash and share payments coming into Skyharbour, which covers. We've only had to do one hard dollar financing in 6 years. We can take advantage of flow through financings to pay for the drilling. But these companies, most importantly, will fund the exploration at these projects. So we have, as you like to put it, multiple shots on goal. It really is a very unique model and story in the sense that instead of it just being a 1 or 2 project company, live by the sword, die by the sword, or the drill rig, we offer investors a unique exposure, optionality value to multiple projects, programs, operators, and if any one of them hits, again, these discoveries in the Athabasca Basin can be multi-billion-dollar discoveries.
Absolutely. And just briefly, you have enough cash on hand to do all this?
Yeah, we do. So we got some cash and shares of Denison, which have already done quite well in the last month and a half, 2 months from the transaction at Russell. We've got over 11 million in the treasury right now. We are expecting to receive another 2 to 3 million as a part of the prospect generator business. On top of that, our drill budget and exploration budget that we're funding directly this year will probably be in around the 6 million Canadian dollar mark. So more than enough to cover that. And we still have quite a few properties, 100% owned properties in inventory that we can look to monetize. We can look to option or sell or JV out, and not have to continuously raise money in the market, or when we do, we go and we raise flow through at a much higher premium.
Right. So yes, as I've said, multiple shots on gold. There's going to be a lot happening with Skyharbour this year, so check it out. It's a stock I own. So thanks for watching here at the Metals Investor Forum.